much, Mr. Gandhi, Mr. Sambamurthy, Dr. Ramashastri, Dr. Acharya, Mr. Kakodkar, or Dr. Moore, colleagues from the RBI, distinguished bankers, and other distinguished friends. It gives me great pleasure to be here today at this event organized by IDRBT. The contributions of this institution to technology research and training and teaching in this country are immense. I think at this point I would like to acknowledge a giant of modern India, Dr. Rajan, who had the foresight to think about the need for this kind of institution in 1996 and put the resources of the RBI to work to create the foundations of this institution, and we see the consequences today in the contributions it has made. I would also like to thank Mr. Sambamurthy for all the work that he has done and the effort he has made to bring this institution to the heights at which it is today. Thank you very much, sir. And finally, I'd like to welcome Dr. Ramashastri. You now have the hot potato, and you have to make sure that it stays on the path that has been set for it and reaches even greater heights. I don't know anything about technology, though I am an electrical engineer by training. My son sort of despairs of me, and essentially his advice when I start doing anything is, leave it, let me do it. So given that, I'm sort of the wrong person to be here to talk to all you people who are familiar with technology. But let me try and place it in the context of some things that I think I know more about. And that is the tremendous importance of technology today in outreach, in inclusion, in bringing more elements of our society into the reach of the financial sector. Technology helps us do many things at relatively low cost. And one of the difficulties in reaching the bottom of the pyramid is essentially the cost of reaching that place. And so let me talk about what we need going forward in financial inclusion, what the RBI is trying to do, and what role technology can play to give a sense of what are the kinds of things an institution like this could be helping you, the bankers, and us, the regulator, with. Now, I think an easy way to think about financial inclusion, I call it the 5 Ps, that it's a way of summarizing the broad aspects that we have to worry about. One, of course, is we need products that the Dr. Nachiket Moore committee said was suitable for the larger public. That is, products that are shaped for the needs of individuals, that don't tax their understanding too much, and that are transparent and don't take them for a ride. Now, we have put out in the last few weeks a consumer code, which we expect that banks will adhere to. One of the main elements of that code is what the Dr. Nachiket Moore committee proposed, which is more onus on banks to determine what is suitable for individuals. Now, of course, that's a harder task than just selling the product to the individual. We have to find out what the individual understands, what their needs are, etc. It need not be done for all products. There are some basic products which one can sell with absolute conscience that there's no need to do more. But there are more. There are products that could put an unsophisticated customer, an unaware customer, at a disadvantage. Now, of course, if every customer had to be advised in detail, it would be a horrendous cost for banks. And this is where technology again comes in. Can we understand customer profiles better? Can we use technology to inform the customer better and more easily about what is appropriate, what is inappropriate? Can we use it as an aid to the banking officer who's dealing with the customer on how to proceed with a particular customer? And this implies collecting information, doing the analytics on your customer base, and trying to figure out on that basis what is suitable. It is something that is a step beyond where we are, but it is a step that we will have to take as we bring more and more people into the ambit of the banking system or the financial system. So first is product. We need suitable products, whether they're insurance products, whether they're basic bank accounts, whether they're savings products, whether they're payments or remittances products. The second aspect is we need to reach the customer. The product should be available at the right place. And all of you know the many attempts we've made to try and reach the customer in remote areas. And clearly, communications technology has to be an important part of it. Mobile technology has to be an important part of reach, as also technologies that can reach cash there, mobile ATMs, white label ATMs, point of sale machines, and so on. In this, the RBI has been trying very hard to get banks to cooperate with mobiles. Now, this is something that obviously there have been some alliances, but the level of transactions that are done in this way are still very low in this country. Now, as a result of work done by IDRBT, but also Reserve Bank officials, as well as IBA and the bankers, we've got some agreement, and I should say TRAI also played a role here. We have got some agreement on USSD technology and standards there, such that banks and payment companies can come together. There's even some regulations that TRAI has put out on the cost of transactions that will be paid to the mobile companies. So we've got the underlying framework. Now we've got to get the transactions. We've got to make things happen. And for this, one of the important elements will be to get usable USSD technology. That is technology that is an app, for example, that might sit on a simple mobile that allows people to do transactions very quickly, very easily, without substantial requirements or tax on their capabilities. I think that can be done, that will be done in the near future, but it still has to be done. It's a step we have to take to make USSD technology viable and possible in this country. We also, I think, should not underestimate the power of competition in making these alliances happen. And for that reason, we've also progressed on putting out guidelines for payment banks. Basically a way to allow a variety of entities, such as mobile companies, perhaps some software companies, perhaps some retail houses, to enter the business of payments, to set up payment banks. And the idea here is the payment bank will not do any credit functions, but will allow transactions as well as safe accounts. And to my mind, a viable model would be a payment bank which essentially allows access throughout the country, but at the back end has a tie-up with a regular commercial bank so that it can offer services over and beyond what the payment bank is allowed directly to the customer. So it would be a pass-through or a business correspondent for some of the more sophisticated banking services, while undertaking directly services like remittances and so on. My hope is that by licensing payment banks, we will also further the cause of bank payments, bank alliances. In the next few weeks, we'll also put out regulations, we'll also put out guidelines inviting applications for what we call small finance banks. And these will be banks that will cater to smaller customers across the country. The detailed guidelines will also be put out. So place accessing people in remote areas, primarily but not exclusively through technology, through new institutions, through greater competition for their business. My hope is this is something that we'll see a reality, we'll see move into reality in the next few years. Third aspect is price. I mean, for people who are relatively poor, we need to make sure that they can afford. I think affordable excellence was the term that Mr. Sambamurthy used. We absolutely need affordable excellence. It doesn't mean cheap products, it doesn't mean inadequate products, it means good products, but simple and affordable. And I think technology is critical to affordability. But my sense is in many of these situations, scope is as important as scale. If you can sell many products to an individual, you can amortize the costs of accessing that individual, providing the basic account. And this is where, again, once again, information is going to help. So, for example, in the Pradhan Mantri Jan Dhan Yojana, if we can move mobile payments, if we can move these direct benefit payments into the bank account, we can then monitor how the individual uses those direct benefit payments, and we create an information base. We use analytics to determine what that use means about this customer's creditworthiness, and then that translates into an additional product, which could be an overdraft facility. So essentially, first inculcate the savings habit, understand how this person uses cash, and then use that to actually offer more products down the line to this customer. To my mind, that would eventually amortize the cost of acquiring the customer. The fourth aspect is protection. That we need, again, I thought that term was excellent, affordable excellence, which means that the product has to be fail-safe. It has to be suitable. It has to be appropriate for the customer. I already talked about the consumer protection code that we need to bring out and enforce over time. I'm hopeful that different banks, boards, will think about the best way to determine and roll out suitability. And as we learn from different banks on how they do it, we can sit together and see how eventually we can bring this customer code to have some bite throughout the country. So my hope is that we will see different ways of implementing it, and we will actually be able to ensure that customer protection does take place. But in addition to customer protection, we need customer literacy. We need to figure out new ways, good ways of reaching the final customer and teaching them the values of finance, right? Now, this is not just holding a camp for a day and then going away and saying, that's it, they've learned, because they don't really learn. I think the studies across the world on consumer literacy basically suggest that it's really very hard to get the concepts of finance, including seemingly simple things like what the interest rate is and what does it mean and when is an interest rate excessive. Getting somebody to internalize that is really quite hard. And I think we have to work both on the regulator side as well as on the bank side on how to teach people who are typically not dealing with finance issues on a daily basis. How do we teach them how to be literate about their choices? And finally, we need a grievance redressal process, which should be easy. Again, this is where technology comes in. Can people file grievances at a distance in an easy way so that the process, their concerns, their complaints can be remedied at relatively low cost? And the final aspect, the final piece, so to speak, is that we need profits, that inclusion should not be thought of as a social service. It is a social service, but if it remains a social service, then it happens only through constant mandates or constant pressure from the regulator or the government. But that eventually will lead to a deteriorating quality of service. What we need is for it to be profitable, that banks should go out and want to include more people, because bringing more people into the net means more profits for the bank. So how do we make it profitable? All these things come in, but most of all technology comes in. If we can, for example, combine direct benefits with Aadhaar, with the bank account, with mobile technology, all at one go, it could in fact become profitable for a variety of reasons from where it is now. So let me end by talking about a couple of things which would be very important. One is, of course, what's an example of how we would see this progress in the years to come? And one example which I was given at IDRBT is at the canteen here, at the is it canteen you call it, or canteen? IDRBT personnel can go with their card and this near field contact technology embedded in the card, so they go near the point of exit, it registers their presence. But there's also biometric authentication, so it says that the person holding the card is really the person who's supposed to be holding the card. That's something we need for the rest of India. It's a technology which exists here. We need to figure out how to roll it out in the rest of India, because think of it. The problem today is if I just give a card to an individual, somebody else can take that card. Well, you'll say there's a PIN, but how many of our individuals who come freshly into the financial sector net understand that they have to keep the PIN to themselves? How many of them will hide it from the village sarpanch and keep him from getting access to all their financial accounts? But what if that card had biometrics embedded in it? They didn't have to type out anything. They may have difficulty filling out forms, etc. But that card coming near a machine, the machine could capture the entire form, who they are, where they live, etc., without them filling in. But it would also register, if it had a biometric capacity, that this person holding that card was indeed the individual whose information has gone in. You could do transactions relatively safely for relatively unsophisticated individuals. Can we combine these two and roll it out more widely? Or there may be other solutions. I'm just talking about a solution which seems to me quite attractive given the constraints in our country. And can we do transactions on that basis? Now, I've been talking largely about individuals, but I think all these issues that we've talked about hold also for small and medium-sized firms, which have similar costs of accessing finance, where information and analytics can play an immense part in bringing them into the financial net, and low transaction costs are extremely important in making access to finance, whether savings or credit, more easily available to them. In this context, I should mention that we are trying to progress on trade receivable finance, where small and medium-sized enterprises that have receivables against large enterprises can actually, in an automated fashion, have those receivables put up for auction, bought by various people with surplus cash, whether they be financial institutions or banks, at a discount, such that those buyers get an interest for the loans that they're making, and the small business gets its money quickly so that it can go out and invest more in the business and grow. This is something for which we've put out the guidelines, and we're going to make some legislative changes that are necessary to make this a reality. But going forward, we would hope that people would join us in making these kinds of innovations, and I hope there are more to come possible. Let me end with two issues. One is technology and innovation. There is going to be from a variety of sources, a massive amount of innovation. Payments are going to be transformed. We're going to see a whole new set of players entering the industry, even as our plans are. But going forward, many more may come in that we haven't planned for today. So as regulators, we have to adapt to changes. Now, because of the pace of development of technology, it is important that we constantly see what is happening, learn how to think about these technologies from institutions like the IDRBT, and then develop our regulations for those changes. That doesn't mean we allow people to violate the regulation as it stands today. But if there are consistent violations in a particular way, after stamping out the violation, we understand what is it that we are doing that is not keeping pace with the changes, and if necessary, we adapt our regulations. That is the intent. We have been at the vanguard of technology at the Reserve Bank of India. A number of things that we've done. The RTGS system, for example, that we have, state of the art. I'm told today that we are moving towards near real-time retail electronic payment system. Instead of settling every hour, we're going to move to settling every half hour. That's nearer real time, and I presume that number will keep getting divided by 2 for many years to come until we are effectively real time. But on many issues, we are moving forward, and I think that what we very much benefit from is the partnership of an institution like IDRBT there. Let me end with lots of opportunities in technology. The sky's the limit, as they say, but there are also downsides. We must be aware of the downsides of technology also. Just last week or the week before, we read about JP Morgan Chase losing a large number of accounts due to hacking. We have hackers on a massive scale around the world. Cybersecurity is important. But in the same way as access to the unsophisticated can be a good thing because it brings financial services to them, it can also be a bad thing. I keep saying in public messages, if you get a message from the RBI saying, please hand over your money, if you hand over just a small amount, we'll give you a large amount back, please ignore those messages. The RBI never, ever asks you for your money. We have plenty of our own. We don't need your money. And ignore those messages. But more broadly, whenever you get a message from Nigeria or the UK or anywhere else, somewhere far off, saying some large amount of money has been found, and due to some quirk of fate, you've been chosen to receive it, always ask yourself, why is God giving me this money? If the good Lord has no reason to give you the money, then it probably isn't there. So there's no such thing as a free lunch, it's been said before. But the broader point is we have to be aware that technology brings both good and bad. And we have to guard against the bad side of technology. And that means that we need also institutions like the IDRBT to think of defense. Whether it's cyber defense, cyber security, we need to think of ways of protecting our systems from intrusion to keep our transactions safe. One of my, what keeps me awake at night is a massive intrusion into the world's financial systems, which then creates, some of you in the banking industry know this term, a Herstat risk magnified. And I think that would be a real problem, which means we have to constantly try and maintain the security of our transactions. And I think IDRBT, once again, is going to be our leader in this process. So again, thank you very much for inviting me here. And congratulations on all that you've done, and best wishes for what you're going to do in the years to come. Thank you.